Good morning. This is a map, a chart of China's trading partners, the countries of the world. I've linked to it too, so you can see it more clearly on your screen probably, and also the source data. Now, imports from these countries inbound China are on the left side. Exports from China going out to those countries is on the right side. It's also grouped by continent and color-coded. The bottom part on the left, trade surplus. This means that China's trade surplus in 2022 is $857 billion. 857 more on the right side than on the left to make them balance. Asian countries are on top in red. We see that China is running a trade surplus with the rest of Asia. Europe is in light brown. China's trade surplus with Europe is enormous, running roughly 2 times trade going the other way, coming in. In purple is next, that's North America. This is even better for China, worse for us. In fact, China's total trade surplus in 2022 was, the total trade surplus was $857 billion, and $576 billion of that was just from the United States. South America is in orange, and China runs a small trade deficit with South America. And that deficit with South America has grown in 2023, especially with Brazil and Chile. Oceania is in gray, and China has a small trade deficit also, more imports coming in than going out. And Africa, where China's in surplus again. Every day, all year long, China is running about $3 billion of trade surpluses with the United States. Their surpluses are also huge with the European Union. Call it $600 million per day or so in USD, but that trade will mainly be in euros. So these foreign currencies are pouring into China from North America and from Europe. Typically, a country would use these proceeds to buy assets there. The trade flows would be equaled on the other side by investments. China would take US dollars and buy treasury bonds, or buy land in the US to build a factory, or buys stock in US companies. That's where the dollars go. That's what Japan did with their surpluses. That's what South Korea did with theirs, and Germany and the UK. But China is not doing those things now with their trade surpluses. The United States is uninvestable, hostile even to friendly countries and companies who want to try to set up a factory there. So fixed asset investment is out for China. They're also dumping bonds, treasury securities. So they're not going to be buying more of those with the new $3 billion that they're going to be earning today and then again tomorrow. So where are those dollars going? These recent headlines here have posed a lot of questions. This was a confusing trade to people in the industry who are trying to figure it out. In the first quarter, China sold $53.3 billion in treasury and agency bonds. These are sales in the secondary market. China didn't simply say, let's allow these notes to mature and then we'll just take the dollars at maturity. They sold. They said, give me the market value for these instruments right now. They took losses on any bond or note where the market yield was higher than when they bought. And it's almost certainly true for this entire portfolio of bonds here. I don't care what anyone says. This is not so simple to understand what China's financial managers are thinking here. They were not dumping bonds to buy gold. They can use their own cash reserves to do that easily without losing money on bonds. They also weren't dumping bonds to shore up their RMB, the Chinese currency. That was the dumbest thing I've seen yet. But these guys here actually wrote it down and even got their editor to publish it. This is off too. China is not de-dollarizing so much. China cannot de-dollarize because the US pays in dollars. China also cannot get away from euros because the EU pays in euros. China is not so much dumping dollars, and they're not dumping euros. They're simply moving them. They're getting the dollars out of American banks. They're getting the euros out of European banks. It is true that the US dollar is the world's reserve currency, and the USD is accepted everywhere. And it's also true that China earns more dollars than anybody. Same with euros. And when China sold these treasury bonds, they did not get away from dollars because they received US dollars when they sold them. They've got the dollars. But what I think they're doing is getting the dollars previously held in Belgium out of Belgium. Belgium and their friends right now are trying to figure out how to spend Russia's money that's in European banks. And so China wants their money gone out of there. Here is the chart again. They need to buy stuff from South America, and they don't really want to use their own RMB to do it. So they'll use dollars for a lot of that trade. They just won't use US banks to move those dollars, or European banks that nobody can trust anymore. They'll be using their banks. China is setting up bilateral trading lines and swap lines using renminbi. Those are becoming more popular and common. But they're also happy to keep doing things this way, trading in dollars and euros, and without the risk of having any of their reserves seized that are in a European bank or in an American one. China is setting up an entirely new banking system using gold, using RMB, swap lines. Even Bitcoin is in Hong Kong now. All those things, plus a whole lot of dollars and euros. Who else might want to be part of such a system? Russia, of course. Russia also runs large trade surpluses in euros. Saudi Arabia, the UAE, Qatar, huge trading surpluses in USD and in euros from those countries. These countries merely need a system of banks that are completely outside the US and Europe. So they can take their dollars, take their euro, and put it into their own bank system instead of ours. Consider finally how fractional reserve banking works. Suppose a Chinese company has a bank in the United States, Bank of America account, let's say, with $1 million in it, average daily balance of 1 million USD. Bank of America can take that $1 million and create loans with it in the US economy. Home mortgages, loans to expand businesses, credit cards. That $1 million held on deposit can create up to about $8 or $9 million in new loans, new economic activity, new loan assets for Bank of America, new interest income for them. But China is closing accounts worth billions and billions of dollars, and they're moving them out of American banks into their own. It's now China banks who can now create loans with all that new money. They can create US dollar loans to be repaid over time, either in USD or in RMB, whatever they want. And China also learned that they could never, ever be in the position that Russia was. Their money cannot remain in our banks for even a short time, not even over the weekend. If that means they take a loss, instead of waiting a bit longer, they take the loss, get it out, get it to safety, and then they can lend to whomever they want with much less risk. We Americans have treated our currency, the US dollar, as a weapon, a source of power. And it is indeed a powerful weapon. And China and Russia, all these other export-rich countries in Asia, the Middle East, South America, now they've got it. Have a great weekend. Be good.